Ladies and gentlemen, it is with profound respect and anticipation that we now welcome the arrival of our distinguished guests. Among them, we are truly honored by the presence of a towering figure in Sri Lanka's financial landscape, the Governor of the Central Bank of Sri Lanka, Dr. B. Nandalal Veerasinghe, whose visionary stewardship continues to shape the macroeconomic and monetary framework of our nation. Alongside, we are privileged to welcome esteemed representatives of Central Bank of Sri Lanka, the Chairman, the CEO General Manager, and the Board of Directors of People's Bank, the representatives, the members of the Board of Directors from People's other dignitaries gracing this occasion. Let us receive them with the warmth and respect they so richly deserve. To formally inaugurate today's proceedings, I now request everyone to rise for the rendition of National Anthem, followed by People's Bank Anthem.
සිරසට දින දින සෙවන සලස්සන ඉපැදුණු උපදින ශ්‍රී ලංකා ගන දිව මතුරක් වෙන දෙසරට නැංගුව මහජන බැංකුව සිරසට දින දින සෙවන සලස්සන ඉපැදුණු උපදින ශ්‍රී ලංකා ගන දිව මතුරක් වෙන දෙසරට නැංගුව මහජන බැංකුව
රතු පිටි කම්හල් දස දහසින් උගුඩා
සමුපකාරය මව් එකේ දැඩි වූ බිලිඳා මහජන බැංකුව මතු මතුවත් ජනතා දිනිදා
සිරසට දින දින සෙවන සලස්සන ඉපැදුණු උපදින ශ්‍රී ලංකා දන
දිව මතුරක් වන දෙසරස නැංගුව මහජන බැංකුව ගෙදරට යන දරු පරපුරකට සරණ දේවා
ධීවර කම්කරු ගොවි නිවසේ දුක් අඳුර නිවා
රජ සිටු කුලයට පැලටත් දී ණය සහන පවා මහජන බැංකුව බැබලේ
යුගයෙන් යුගය ගෙවා
Thank you, ladies and gentlemen. You may be seated now. To extend a gracious and formal welcome to this gathering, it is now my privilege to invite to the podium a distinguished leader whose vision and stewardship continues to guide our institution forward. Please welcome the Chairman of People's Bank, Professor Narada Fernando, with a round of applause as he delivers the welcome address.
Very good evening to all of you. And Dr. Nandalal Veerasinghe, Governor of the Central Bank of Sri Lanka, and all other distinguished guests. It is a great pleasure to welcome you all to this evening. Actually, so I must, first of all, we warmly welcome Dr. Nandalal Veerasinghe for this event. The banker's responsibility lies in line with the Central Bank of Sri Lanka Policy Agenda 2025 and beyond. So that is what we wanted to discuss and enlighten our members. So we warmly welcome you, sir, for this event, and even the all other guests from Central Bank, as well as the board members of People's Bank and the chairman, COGM of People's Bank, as well as People's Leasing and People's Insurance. And at the same time, I warmly welcome all the key management positions in People's Bank and from other organizations. And especially we have invited those who have achieved their excellence, and we celebrated their excellence in Achievers Award 2024. So we invited them and the branch managers, so what we have recognized as great achievers. So they are the audience for today. And the mainly, when we are selecting this central bank governor as the first speaker, because we hope that we want to continue this for a few more sessions about the financial developments and the governance issues in Sri Lankan economy. We wanted to invite Governor of Central Bank, because we know in 2022, 8th of April, so when he assumed duties in the headset seat of Central Bank, so the entire country it was not in a very conducive manner, all we in a crisis. So normally that ordinary person will not accept that challenge. But accepting that challenge to keep this country in a correct decision and correct area, so we highly appreciate your commitment on that and your guidance. So we thought that so we need, and you are the best person to address our staff about the roadmap of central bank for 2025 and beyond. Because we are going with the very progressive year, earning the highest profit in our history. And our staff members, they are much dedicated to do more. So by recognizing that, we consider this as a continuous professional development in their career, and especially your words and what we have to do. So that may be related to global issues, that may be related to environmental issues, and maybe other economic related issues. So even I saw that in your recent discussion, Governor, you mentioned about the climate claim we have to go with more than 10.8 billion USD. So that may be in 2030. So those are the new areas, so new avenues we have to check whether we are ready for these things. And so you are the one who can explain about these things to bankers. And at the same time, I am honored as I learned that you have started your banking career from People's Bank. I don't know whether I am right or wrong. And historically, this is very valuable date for People's Bank. Once again, as I learned, this is the first time a governor of central bank visited People's Bank. That is very memorable. And even we are having the same type of thing that after 20 years, President of the World Bank visited Sri Lanka to commemorate his visit. We heard like that he donated about 1 billion USD start for next 3 years' time. But your words, we value more than that. So we think that we can create more than that, more than 1 billion with your advice to all our staff members. So with that, I warmly welcome once again you to this forum and all the members and all the participants. Hope that with this discussion, you can take very good message to your fellow employers to take that advantage and be the next level of our economy. Thank you. Thank you very much.
Thank you, sir, for your thoughtful words and setting the tone for the evening. Ladies and gentlemen, now we arrive at the highlight of today's event, an intellectual engagement with one of the most respected minds in Sri Lanka's financial and regulatory domain. It is indeed a rare honor to welcome to our midst the Governor of the Central Bank of Sri Lanka, Dr. P. Nandalal Veerasinghe, whose strategic leadership and depth of economic insight have played a pivotal role in shaping country's monetary policy, stabilizing financial systems, and fostering economic resilience. Dr. P. Nandalal Veerasinghe holds a PhD and a master's degree in economics from the Australian National University and a Bachelor of Science degree from the University of Kelaniya. Dr. Veerasinghe served at the Central Bank of Sri Lanka for nearly 30 years in different capacities, including Chief Economist, Director of Economic Research, Assistant Governor, Deputy Governor, the Senior Deputy Governor. He also served as an alternate Executive Director for India, Sri Lanka, Bangladesh, and Bhutan at the International Monetary Fund. Dr. Veerasinghe also served as visiting lecturer for the master's degree course in economics at the University of Colombo, visiting research economist at CSEEN Center, Malaysia, and visiting research fellow at the Australian National University. He is also an advisory board member of the Center for Applied Macroeconomic Analysis, Crawford School of Public Policy, Australian National University. He has published several research papers in international and local journals, including the Central Bank's Staff Studies. After retirement from the Central Bank in January 2021, he worked as an independent consultant for economic and financial matters for multilateral agencies and global investment firms prior to assuming duties as the 17th governor of the Central Bank in April 2022. Dr. Veerasinghe has been rated A by Global Finance magazine in 2024 based on inflation control, economic growth goals, currency stability, and interest rate management. His address today on the theme Bankers' Responsibilities in alignment with the policy agenda of the Central Bank of Sri Lanka for 2025 and beyond resonates with renewed relevance as we navigate an increasingly complex and dynamic financial environment. May I now respectfully invite the Governor to the podium to deliver his keynote address. Let us all extend a warm and resounding round of applause.
Good evening. First of all, let me thank the Chairman, Professor Narendra Fernandu, and CEO Clive, and the senior management for inviting me and giving me this opportunity. My colleague, Deputy Governor, and also other affiliated subsidiaries of the People's Bank staff, senior management, key management personnel, and other staff. It's indeed an important occasion for me, especially and can share before I deliver my remarks on the topic. Let me share personal experience that I had with the People's Bank. As Chairman already alluded, I started my banking career at the People's Bank in 1990 as a management trainee. It's about 30, I think, 5 years ago. It's a long time. I don't think anyone of my batchmates are here or probably retired. They also joined at the same time in 1990. Even before that, I think my association with the People's Bank is going beyond my banking career because I come from the south. I'm from the Kerala, where my parents, obviously my father is a businessman in that area, and it's a good customer client of a People's Bank those days. I used to visit the bank for banking matters, right from the school days to the bank, the branch those days with my father. And that's where I started. And then, obviously, even after I went to the university, went to the school, I still associated with my, involved in my family business without looking for any formal employment. Another 8 years after my graduation, I still lived in this area, ran the business of my family, and had good banking relationship with the People's Bank from a customer point of view for a long period. That was the beginning of my association with the People's Bank, with my family, and my father had the account until he passed away about 20 years ago. And then obviously after some time, because of those days we had some issues in the area, I had to look for employment because of the disturbances in late 1980s that we had in the south. So when I started, this was after 8 years of my graduation. I passed in 1982. This was 1990. I started my started new training on the IT, information technology, at the University of Colombo, just over here. Enrolled for postgraduate diploma in information technology at the University of Colombo, just to start a new career. While I was doing this course, for 1 year course, I started applying for management training positions, those were open those days. And I saw the People's Bank, then I applied. I was selected as a first top 30 people those days. As a rule, those who are getting highest marks should be recruited without any interview. So I was in within that 30, joined the bank in August, I think, 1990 batch. While I was, then I gave up the course after 1 semester, joined the bank. After some time, I again did the similar exam with Central Bank in 1991. And I go through that as well. And then obviously, that time it was 1st of April 1991. Another batch was recruited to the Central Bank as management trainees after about 8 months of People's Bank career. Mr. Janakanran, our deputy is in the same batch, our colleague. But you see what happened, I decided not to join the Central Bank at that point. That was 1st of April. I said, that time I liked the job very much. All the new management trainees were basically located somewhere in Anuradhapura for over 3 months, had some field work, and we obviously had a very good time. So when I got the appointment letter from Central Bank to join the bank 1st of April, I said I didn't want to join. I just put aside and didn't go. Then after the training, I was attached to the IT department of the People's Bank because my background of first semester of IT course, postgraduate diploma in IT course, I was attached to the People's Bank IT department. With an intention for me, I had a lot of interest in IT those days. It's a very early stages of technology. I thought I'll get another 6 months leave for me to complete the postgraduate diploma. Then people said, no leave can be granted for staff. That's not academic institution, this is a commercial institution. So I understood that. And I went to Central Bank and asked whether I can come with some delay. Then after 3 months, just before 3 months, when I went to Central Bank, then Governor H.N. Karnataka said, okay, I'll give you, before end of 1st of July, if you come, you can come, otherwise don't come here. So that was opportunity. I resigned from the People's Bank, joined the Central Bank. 3 months later, then our batchmates, old batchmates, joined 1st of April. I joined the People's Central Bank on 1st of July, 1991. That was the beginning of a central banking career. So what I just share with you is that I have been as a customer of the People's Bank and the staff of the Central Bank, and now as a regulator of the People's Bank. I have seen all inside out of the People's Bank from different perspectives. I don't think you will ever have a central bank governor with this experience. I think you will never have. It's very rare. So with that, I think just to share with you my experience, I think that's probably very unique. As I thought I come and share my views as a governor of central bank. It's a different role, obviously. It's much more important role as a regulator. That's why I think I will share some of the thoughts that I have on the topic, bankers' responsibilities in line with the CBSL policy agenda 25 and beyond. I think this is a very important topic. On that note, I think just to begin, give you some background, I'll share first of the central bank. Every year we announce our policy agenda at the beginning of each year. So in 2025, early this year, we announced this in accordance with our mandate under the central bank. Our mandate, especially as you all know, focuses on maintaining domestic price stability and ensuring the stability of the financial system. Both are very important for any bank, any commercial bank, or for the whole economy. So thereby playing a crucial role in fostering an environment where all economic stakeholders can thrive. So accordingly, the focus on agenda today is maintaining stability, both financial stability and the price stability. That is the central bank mandate. It's different from commercial banks. It's different from any business entity. It's a unique mandate that a lot of central banks have. So I take this opportunity to outline the key responsibilities as a regulator, especially where it most matters for the People's Bank or any commercial bank, and what can be expected from the banking sector in achieving the goals outlined for the banking sector in our agenda, particularly the People's Bank being the second largest bank operating in the country with an asset base of 3.4 trillion and very wide branch network of 750 branches and a large workforce. I think one of the largest banks. So I think, as I mentioned earlier, knowing the bank, I think this is one of the biggest bank, and also in terms of the contribution, you can make a huge contribution for the economic development of Sri Lanka. So we central bank has developed the bank recapitalization strategy to strengthen the financial system stability through an adequately capitalized banking system. We all know, I think, central bank, the People's Bank, the challenges the bank had in the recent past with the crisis. We had several discussions, the MPs and board of the issues, and now as a result, we brought in this recapitalization strategy, and this includes banks adhering to board-approved recapitalization plans to maintain adequate capital, ensuring compliance with the minimum capital requirements, and actively participating in the semi-annual monitoring of progress. So that's a requirement under the regulation now. Additionally, banks are also expected to support market-driven consolidation, which will foster the development of strong and more resilient financial institutions. As well, there will be opportunities for market-based acquisition mergers of some of the other banks. That's, I think, as a bigger bank here. These collective efforts are essential for creating a stable and competitive banking sector. That's an important one. Is the banking sector is much more competitive now than if you compare 2-3 decades ago, because much more competitive banking sector. Private banks are much more competitive, and you can't be basically complacent as a state bank. That can contribute to long-term economic growth. So our regulations strengthen the legal and regulatory framework of licensed bank through enactment of the Banking Amendment Act number 24, 2024. This is a new legislation that was enacted last year, which was a requirement and which was much needed reform that was introduced last year in response to the stresses that bank sector had. The implementation of directions under this amended act covering several key areas such as, first, large exposures, corporate governance is important in the modern commercial banking, liquidity, related party transactions, and offshore banking business. Those are the important areas under the new Banking Act that we have issued directions, especially covering and regulations in these areas. These directions were issued with the intention of mitigating risks and enhancing the soundness and resilience of the whole banking sector. Not only the People's Bank, this is common and applicable to all the banks, all the commercial banks coming under our regulations. So Central Bank will closely monitor the compliance of banks with these regulations, and it is the responsibility of banks to ensure that they meet the regulatory requirements outlined in these directions, as failure to do so would undermine the stability of individual banks as well as the broader financial system. We don't want to have any single bank failure, and also we don't need to have any kind of a spillover or contagion effects to the broader financial system with the failure of any even in a small bank. That's why it's important that all the banks meet all the regulatory requirements that outlines, especially in the new directions in the areas that are much more important now compared to the past. In the case of People's Bank, with the implementation of the large exposure direction, the bank will now need to change the business model. That's one important message I want to convey here. As a state bank, knowing the bank business model, it's time to change the business model now. From predominantly lending to state-owned enterprise. We all know People's Bank, major business has been lending to state-owned enterprises, have been making a lot of money, but that has to be changed. So is to fund and also this change the model to fund the private sector entities, and hence with the need to strengthen their underwriting skills and competencies to handle the private sector customers. That is imperative. So when you look at the People's Bank historically for a long period of basically having large exposures to state enterprises, which is easier business, not so competitive, captive sources, but that's not going to be the business model going forward, especially state banks. For this, we have different culture of business by the state enterprises going forward, and we, in our direction, especially People's Bank like People's Bank, need to reduce the large exposures to state enterprise going forward. That's where you need to change your business model to cater for the larger private sector to support the economy. So on the economy, we face, as you all know, significant challenges, especially starting from the 2019 Sunday attack, then the COVID-19 pandemic we had in 2021 and 2022, and the political and economic crisis in 2022. In response to these challenges, we, Central Bank, implemented various relief measures to support businesses and individuals. That's where the asset quality asset quality deteriorated in a lot of banks, and including the People's Bank. We had to implement a lot of relief measures to support the economy and the customers of the banks. Now, with the unwinding of these relief measures, Central Bank issued guidelines to banks on the establishment of business rival units, BRUs. This important one, I think I must highlight here. The role of the business rival units is very crucial. The purpose of BRUs is to identify and assist performing and non-performing borrowers of licensed bank who are facing challenges because of the legacy, the crisis issues or other issues, or may face potential financial difficulties due to reduction of income, because we know economy is not up to the level that we had before the crisis, or due to cash flows or sales reduction or impairment of business operations, or the temporary closure of businesses emanating from extraordinary macroeconomic challenges that these businesses were facing. These all are your clients. That can tell you from the both sides, being on the business side and also banking side. I think this is where you need to meet and support your own customer businesses through this mechanism. Therefore, banks are expected to identify and assist such performing and non-performing borrowers who are facing challenges or may face potential financial difficulties, and facilitate out-of-court arrangements. This is one of the issues, is that we are always, banks are getting the allegation that Parata execution, a lot of pressures for the government to suspend all these things, but we have been defending. Banks try to collect whatever dues. This is where this BRU mechanism is important. Facilitate out-of-court arrangements to recover defaulted loans of viable businesses. It's only viable businesses through restructuring and corporate workout frameworks. There are two frameworks. One is the rival units under which corporate workout framework. I'm sure all bankers are familiar with this. I think this training skill enhancement just should go through the process, right from the head office to all the branches of these requirements. So we, Central Bank, has also recently announced various relief measures for small and medium enterprises that have borne the brunt of recent extraordinary macroeconomic circumstances by issuing a circular, that's a recent circular, to banks on restructuring credit facilities on SMEs, MSMEs, and providing such businesses with financial relief packages after discussing with the banking fraternity. It's all in consultation with the Bankers Association. All the banks, with the collective and consultative process, we introduced this new mechanism, temporary one for this year, but business review units should continue going forward. In this regard, banks are expected to collaborate with concerned borrowers effectively to ensure the consistent application of these relief measures. It's important to apply consistently all these relief measures and disclose to the customers the terms of restructuring. The disclosure is also important. One of the allegations we are getting from the businesses, MSMEs, is non-disclosure, non-transparent terms and conditions, revision of terms and conditions without proper disclosure. That has made it difficult for businesses to survive. In addition, bankers are expected to establish transparent grievance handling mechanisms with respect to disputes that may arise on valuation of auction property. This is another allegation. The valuation of auction properties when it comes to priority execution, like recovery process, we would have a transparent, proper market-based valuation mechanism, so that's fair for both the borrower and also the lender. These measures are expected to help revive business activities of SMEs and MSMEs and facilitate sustainable economic growth of the country. I think these are the new issues that banks are facing. For the credibility and trust of the bank, you need the trust of the customer and the businesses. I can remember we have new unit at the central bank called Financial Consumer Relation Department. You look at the complaints that we are receiving on daily basis from the banking customers are predominantly non-disclosure of terms and conditions and revising and not properly reviewing the terms and conditions on unfair basis. And we had, this where we have now the separate arm of central bank looking at from the customer point of view, where the banks are following proper, transparent disclosure practices and fair practices when it comes to customer financial consumer rights. That's a new initiative that we are, I'm sure that I saw this report from the People's Bank also. They are on-site examination on the consumer side. We are seeing a lot of some of the issues. I think we have discussed with the boards and the KMPs. I hope that all things, those will be addressed. Now, in the new economy, the economists always is dynamic thing. Every time there are opportunities for certain sectors, there may be opportunities less for some other sectors. That has to be understood by the staff of the banks. Now, for example, banks are expected to identify sectors with high growth potential. It's not necessarily you are lending to same sector all the time. Banks should be able to identify, staff should be able to identify what are the sectors that has potential. For example, such as going forward construction, tourism, to ensure rapid economic recovery and sustainable growth. Providing affordable credit for these sectors is crucial, which necessitates maintaining macroeconomic stability. To achieve this, banks must enhance the effectiveness and efficiency of their financial intermediation. This is one of the other things that I'm hearing, especially when it comes to people. For example, I can be frank here because all staff are here, is complain about the unfair commissions, larger margins when it comes to foreign exchange, the premiums, margins, interest rate margins, lower deposit rates than, not inconsistent with the policy rate, and not adjusting lending rates in line with the monetary policy rate, or sometimes adjusting interest rates not consistent with the market trends. Those are all the issues that we have been getting. I hope that these all are basically part and parcel of banking business. If you want to retain customers, good customers, and if you want to provide good services, you have to be that much transparent and should be fair. Now, from our point of view, we have eased our monetary policy stance, as you know, in recent times to support economic recovery and growth, and also maintain inflation at the rate. Right now, it's a deflation actually. Therefore, banks are requested to align to this monetary policy stance by reducing lending rates in line with the monetary policy stance, which will ease the cost of borrowing of individuals and and businesses and enhance their access to credit and stimulate economic growth. I'm happy to hear that right now, Chairman mentioned we recorded, profit was recorded last year. That's good after several difficult years. But when you record large profits, always allegation is that banks are making. And what we hear from the other side is that banks are making excessive profits. They are not looking after their customers. They are not being fair for the depositors and charging very high interest margins. So those are the allegations. I think when you report, I don't mind, banks should make profits. If bank make losses, there will be crisis. Banks should make profits. There's no question about that. Banks should be making profits while taking care of providing competitive services for both the depositors and also to the lenders, and have a more efficient financial intermediary service. The bank which can provide most efficient services to the customers can survive and sustain and prosper on a long-term sustainable basis. So this is where maintaining public trust and confidence is very crucial and essential for banks, as they are primarily funded by depositors and operate with a high degree of leverage. So why banks need to maintain trust and confidence? Because you are handling not your money, someone else's money. So someone to come and deposit money in your bank or any other bank, customer or depositor should have trust and confidence that your money is safe and your money will get a reasonable return, and that money is properly used and get a good return. That's where if you don't maintain the trust, even at the borrowing lending side, if you don't have the customer would have trust in the bank, then you will lose the business. Therefore, banks need to uphold the highest standards of transparency, accountability, and risk management in their operations. These are the modern banking practices. This includes complying with maintaining prudential requirements, especially in areas such as capital and liquidity requirements, as strong capital and liquidity buffers are essential for absorbing shocks and safeguarding the banking system during the periods of financial stress. I don't have to emphasize this point. You already experienced during the difficult times. We saw People's Bank facing a foreign currency liquidity crisis and the rupee liquidity crisis and the capital issues, restructuring of some of the obligations, and obviously needed government support, infuse some of the capital to strengthen banks. Now banks are, your bank and all the banks are in a much better position. So that's why it's important to maintain these buffers so that banks, those who are not having buffers, who are having difficult times when you are faced with a crisis or external shock. Whereas if you are having sufficient buffers, obviously you have sufficient buffers to absorb those shocks, and that you can maintain, sustain the business going forward. So these ones basically help maintain the soundness and resilience of banks, both social capital and liquidity, which in turn ensures the depositors' confidence. That's a paramount importance for a commercial banker. Now, just on the moving into other areas, already Chairman mentioned on the sustainable finance. I think we recently launched what we call Sustainable Finance Roadmap 2.0. First one was issued in, I think, back in 2019. This update of after 5 years, we have issued a new update of Sustainable Finance Roadmap 2.0, which was crafted in collaboration with key stakeholders, including the banking sector and other stakeholders in the country. Focusing on the financial sector, Roadmap 2.0 outlines a comprehensive set of actions geared toward financing sustainable development, strengthening the management of environmental and social risks, enhancing reporting and disclosures, and improving governance and coordination across institutions. So there are I'm going to emphasize the key elements. First one is a financing sustainable development. As I mentioned in my speech, there's a $10 billion requirement until 2030 to finance the sustainable development. And the strengthening the management of environment and social risk. Both is not only environment, environment social component comes with the MSc and SME and SME financing and gender financing and inclusiveness are part of social responsibilities, and environment part, climate part is environment part. So those are important elements of this, and also NRC reporting and disclosure is also another requirement. When you look at the environmental and social standards, it's important to have a reporting and disclosure requirements, and also improve the governance and coordination across institutions. This is something you need to coordinate and collaborate with other institutions. It's not like a normal banking business. This needs much more collaboration. Therefore, in accordance with our roadmap 2.0, banks are expected to integrate sustainability into lending as well as an investment strategies, as well as incorporate environmental, social and governance factors, ESG factors, into risk assessment processes to mitigate potential impact of banking operation on the environment and society. So this also comes with the element of risk management. I'm sure risk management is one area that needs to be strengthened continuously. So our risk management parameters need to take into account these social and environmental risks as well. So the banks are also expected to be more transparent and consistent in their reports related to sustainable finance activities and climate risk assessment. So this ability to raise sustainable finance requires a lot of disclosures. That's why I think you need to enhance the skills of your staff on these new requirements if you are to attract and support sustainable financing activities, including social and environment. Then other area is obviously technology, that I always is area that I really have some interest. Technological developments and fintech products in the banking sector have been rapidly evolving in recent times. We have seen different banks at different levels of technological improvements and applications. I think I'm sure these banks also have a strategy. You need to expedite and implement all these things and bring up to the date technologies in providing banking services. These developments, while offering greater flexibility and convenience to customers, are also susceptible to cybersecurity risks. So these technology wouldn't come not at a risk. It's obviously with some risk. Especially the cybersecurity risk is one of the key risks that, especially when the banking sector, we have seen with some incidents even recently. Therefore, banks are requested to mitigate the impact of such risks by investing in advanced cybersecurity solutions, bringing technology but with mitigative factors in terms of advanced cybersecurity solutions, IT infrastructure, and as well as qualified human capital. This is one thing that's a lot of challenges, getting qualified human capital to mitigate the cybersecurity risks arising from fintech-related activities. We just can't ignore the fintech developments. You can't be in the business or cannot be competed if you just lagging behind compared to other competitors. That's why you need to bring in technology as well as the risk mitigation factors to address the risk that could arise out of the technological developments. In addition, banks must ensure adherence to regulations issued by the central bank, such as banking directions on technology risk management. So we have now issued new directions on technology risk management and resilience of licensed banks, as well as recently issued circular on reporting information technology and cybersecurity incidents of licensed bank. This is an important disclosure. If your bank facing some kind of an incident, important to report that immediately to the authorities or relevant parties, so that we have that information and risk can be mitigated. So broader work-based risk mitigation is important. That we have seen in the past. Banks have their own incidents, but they have not been properly reported, so that can be repeated somewhere else by the fraudsters. So that's why sharing information is crucial. Then on the customer side, customer trust and confidence, as I said earlier, is the cornerstone of a strong banking sector and is essential for the successful operation of banking business. Therefore, it is essential that banks maintain ethical standards responsible banking practices as well as uphold the highest standards of customer service. We all hear all the time customer complaints, and obviously I think this is all up to enhance skills of the training of the staff. It's a different kind of services that customer would get when customer walks into a state bank compared to walks into a private bank. I think this is the reality. This is what we hear from the people. This is where your bank will have to have extra efforts, training skills of the staff to uphold the high standards of customer service. That's being state banks, especially. I think there's a huge difference, I must say, in terms of customer services compared to some of the private banks. This means adhering to fair and responsible lender practices, but also ensuring that customers' interests are safeguarded at all the times. Banks are expected to prioritize clear communication, transparency, and ethical conduct in all interactions. This includes ensuring that customers fully understand the terms and costs associated with their financial products. This is one of the complaints we are receiving, especially from the state banks, not only your bank, some of the other states as well, that less transparent, non-disclosure. Even some of the private banks also, I must say that we get that. That's why we have the Finance Consumer Relations Department looking at, and some new directions and regulations are also coming up, is to have a full transparent disclosure, and customers should be able to fully understand the terms and costs associated with the services that they are getting from the banks. Clear communication of interest rates, as I said earlier, and service charges, and also commissions and repayment terms are essential to build trust among customers. This is what our experience once you open up this Financial Consumer Relations Department. The main complaints are coming from lack of communication on the adjusting interest rates, both deposits and lending rates, service charges, some uncompetitive commissions and margins for some of these transactions, and also repayment terms and the revision of terms. So those are the areas that I think I would like to draw your attention. Also, I would like to draw the special attention of the Board of Directors of the People's Bank to drive the bank in a dynamic, ethical, and independent manner. Don't think this is a state bank. Yes, of course, you are a state-owned bank. It's only the ownership. The ownership is one thing, but when you compete in the market, state-owned entity like earlier captive businesses will no longer be there. Our directions certainly restrict the exposure, specific exposure to captive businesses. We need to have a level playing field for all the banks equally, and this is where the good banking practices, then this bank also will have to adhere to those principles. This is where you need to be competitive, and being a state bank does not mean that you have privileges. You need to be competitive with all the private banks, otherwise I think you will find it difficult, and you obviously should look at the market share in the past and now is continuously reducing, and this is challenge, and it's up to all the banks, especially the state banks, to maintain the share and improve the share of the business through a dynamic, ethical, and independent banking, and through professionalism and good conduct, with the commitment of maintaining resilience and stability to ensure that banks plays role in the economic recovery of the country, and it's good for the banks and good for the staff, good for the economy as well. So finally, in conclusion, I would like to reiterate that the entire banking sector has an important role to play in helping to support the achievement of goals outlined in our policy agenda that we announced January this year for 2025 and for next couple of years. Therefore, Central Bank expects the banks, especially the People's Bank and all the banks, to work closely and collaborate with the banks in securing financial stability and fostering sustained economic growth. Thank you very much.
Thank you, sir, for that intellectually enriching and profoundly inspiring address. Your insights have not only enlightened us, but have also affirmed a noble duty the bankers are entrusted with to serve the public with integrity, prudence, and responsibility. As a gesture of our deepest appreciation and gratitude, we now invite our chairman, Professor Narada Fernando, to present a commemorative token of appreciation to our esteemed keynote speaker, the Governor of the Central Bank of Sri Lanka. And I would like to invite Mr. Clive Fonseca, CEO General Manager, to accompany the Governor to the stage. Thank you, sir, for honoring this occasion and for your generous contribution of time and wisdom. To formally conclude this memorable and thought-provoking session, I would now invite to the stage a leader who continues to inspire and steer our bank through innovation, resilience, and excellence. The Chief Executive Officer, General Manager of People's Bank, Mr. Clive Fonseca, to deliver the vote of thanks.
Good evening, ladies and gentlemen. It's a great privilege and honor for me to deliver the vote of thanks at this esteemed occasion. So, Governor, let me take 2-3 minutes of your precious time to discuss about the three of the important facts that you mentioned. You talked about the business model change, the requirement for a business model change. I'm happy to say, Governor, as of within the last 2.5 years, we've come a long way. As of end of 2022, 56% of our loans and advances were for the SOEs. Right now, I'm very happy to mention that is less than 35%. So we've come a long way there. So then you talked about the business revival units. Governor, actually, we have empowered our managers to approve substantial interest waivers for these customers who are in distress. So that is why, I mean, when you look at the numbers, People's Bank, the complaints from People's Bank SME customers is very much less. Thirdly, sir, you talked about the tariff structure, net interest margins, and the margins for the forex and all. We continuously, our ALCO monitors this tariff structure, and if you look at our tariff structure, I mean, for digital banking, or I mean, even for any other service, it's always the lowest, or I mean, it is never the highest. That I can tell you. It's actually less than the average also. Net interest margin also, Governor, you mentioned, see, if you look at all the major banks in Sri Lanka, our NIM is the lowest. So I think, Governor, thanks to the leadership of the Board of Directors and with the Central Bank, I think we are very happy to say we've come a long way. So now let me go back to my for my keynote, for my speech. So first and foremost, on behalf of the staff of the bank, the chairman and the board of directors, we are very grateful and we are very honored for you to come over here and make this keynote speech. So I mean, which is very useful for all of us. Your visionary leadership, particularly during these unprecedented challenges, was actually was a lesson for us also. So I mean, we saw that you taken some very bold decisions. So I think we were also, I mean, took your advice, and the governing board and the officials of Central Bank, they were very supportive. I think at that time there were a lot of concern even among you and the other members of the officials of the Central Bank, whether the People's Bank could survive this crisis. So we are happy to say that with your support and the officials of Central Bank and with I think most of all the staff, more of the key members are over here. So I think, we come a long way. So then I want to thank our chairman for initiating this and for this very important meeting. And I think the governor, our plan is basically, so we want to do this at least a quarterly event, so that our staff is, they're taught as to and about these important factors and the expectation of the government, and as to the role of People's Bank. And let me thank all of you all, all of who worked tirelessly to make this event a success. Your efforts often go unnoticed, but they are deeply valued. Events like this require coordination, attention to detail, and above all, a shared sense of purpose. Thank you for delivering on all these fronts. Finally, to all the members of our staff and the board members who are present here today, thank you for your engagement and your continued dedication to the mission and values of People's Bank. Let us carry the insights shared this evening into our everyday work and continue to serve this nation with integrity, excellence, and unity and purpose. Once again, our heartfelt thanks to everyone involved. Let us move forward together with renewed strength and vision. Thank you and have a pleasant evening.
Thank you, sir, for your eloquent words of gratitude and your ever-inspiring leadership. Ladies and gentlemen, that brings us to the conclusion of this dignified and insightful evening. On behalf of People's Bank, I extend our sincere thanks to our keynote speaker, the Governor of Central Bank, the representatives of Central Bank Sri Lanka, the Chairman, the Board of Directors of People's Bank, the CEO General Manager, and our leadership team, and all of you who joined us in person to make this event a resounding success. Thank you, and you may carry forward the wisdom shared today as we continue to fulfill our responsibilities within renewed purpose and pride. Have a nice evening.